One of my greatest regrets in my early days of trading was not knowing how to buy low and sell high. So immediately I mark up my point of interest. Anywhere my point of interest fall to, depending on the trend of the market, I choose to buy from that zone and sell from that zone. And at the end of the day, I come to realize that my stop loss is very big compared to where my take profit is. And this challenge persists until I come to realize how I can buy low and sell high, giving me a higher risk to reward ratio. So in this video, I'll be showing you how exactly you can mark your key zone, which will now serve as your premium and discount zone, which means that when I say premium zone, meaning you will be selling high, and discount zone, meaning you will be buying high as a trader. And as such, you are going to have a big risk to reward ratio, which means that your profit will outrightly be more than whatever loss you are going to have. So in this video, I'll be showing exactly how to do that. So let's go into the details of what we want to see. Remember, we always begin by identifying the trend of the market. Everything about this begins with, first of all, identifying what is the exact trend of the market. This is AUDJPY, and as you can see, price has been bullish. So this is a typical uptrend. Price has been bullish over time. So let's use this. Okay, on this both scenario, we are going to have both uptrend and a downtrend. So it is advised, let's use the 4-hour time frame and see how exactly this can be done. Now, one of the major tools that is going to help us through this is our Fibonacci Retracement tool. So let's begin by determining our trend, which is the first thing we need to do. You agree with me that we're having a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and a higher high. So from here, we have a break of structure. So obviously, at this point, we have a change in direction. So this is our break of structure. Do you see that? So now remember, we said once we have, from our previous video, that immediately we get a break of structure, that will now lead us into our point of interest. Now identifying where to sell, because this break of structure we are having here now obviously has changed us from an uptrend to a downtrend. So now this is our downtrend scenario. So remember, we said having gotten a break of structure, what is the next thing we need to do? We now consider where do we sell, because we know that this is a downtrend. So where do we sell? I would say the next thing where to sell, we need to identify point of interest. So what are these point of interest that we need to identify? So our point of interest that we need to identify, we said it can be our order block. So this is our break of structure here. Yeah, this is our break of structure here. So we say, well, we need to identify our order block. So I'm going to mark my order block, right? This is my order block. Okay. So that last candle there is my order block. But even before then, we need to identify what we call the range. We need to do what? We need to identify our range. What is your range? Your range is the recent price movement, which is the structural movement. So now that we had a break of structure here, all of this movement here that breaks structure is our range. The impulsive move is our range, not the retracement. Like this one now, this is the impulsive move, so this is our range. So we are going to mark this movement that breaks structure. This particular one is our range. It is assumed that when this happens, this particular movement has not formed. None of this was in existence at this time. So this is the only thing we're having, this particular range. So now we are going to identify this range. So you are going to identify the high of the range and the low of the range. So this is the high of the range and the low of the range. So it is this range now, the high of this range and the low of this range, that we are going to connect our Fibonacci retracement tool to. Okay, so now, having said that, let us go to explain what the Fibonacci tool is all about. Then we will now come back and apply it into the real price scenario. Okay, so let's get our Fibonacci retracement tool. So now, this is what our Fibonacci retracement looks like. This is exactly what the Fibonacci retracement is all about. In a downtrend such as this, you are going to connect your Fibonacci retracement to the lower low and then the lower high. You will connect the 100 level of the Fibonacci to your lower high, and then you will connect the 0 level of the Fibonacci to the lower low. So what are you expecting? You are now expecting price to pull back into the direction of your Fibonacci. So as you can see in this case, you see price pulling back. So when this price begins to pull back into that zone of the Fibonacci, it is this zone that will help you to know when a retracement has begun. The default Fibonacci will have a level of 23.0. So immediately price closes above 23.0, you should know that that is the beginning of a pullback as far as the Fibonacci retracement tool is concerned. So once price is has closed above 23, that is the beginning of a pullback. We are going to present in a real price scenario, so do not worry. That's the beginning of a pullback. So your Fibonacci level is going to have a level of 23, 32.8, 50.0, 61.8. Then we are going to edit and put additional level, which is what you are seeing here. We are going to put 78.6 and then 88.6 is part of the level we are going to put. Now the rule is that once price is at, you got an entry confirmation at 38.2, that is a low probability trade. So it means that you will be selling here and then your stop loss is going to be at this high. You can see how far it is. So this is not a wise trading decision. You are meant to sell from a discount zone. So at least you'll be finding entry when price pull back to around the 50 zone. Anything from 50 upward, that is where you'll be looking for opportunity to sell. So even if you mark your point of interest, and your point of interest, which is where to sell, talking about your order block, breakers block, imbalance, smart money cube, if they did not fall above 50 upward, you are not taking any of those trades. It simply means that they did not fall into your zone of premium, so you can't sell, because you want to sell high so that you can have a larger take profit. So anything from 50 upward is where you will be looking for a selling opportunity. So having said this and bearing this in mind, let me take you to a real price scenario. Now look at exactly what happened in this particular scenario. This is a typical downtrend, okay? And look at how price has been behaving in this downtrend. In this case, we have what? We have this lower high. We have this lower low. We have this lower high, right? We have this lower low. And then we have this lower high. And we have this lower low. So having established this, we are now in a downtrend. So once you are in a downtrend, what is the next thing you need to do? Identify your range. Identify your range. When this first one happen, this is the range. When this second one happen, this is the range. So you will be connecting your Fibonacci retracement tool to the range that you have identified, which means that in a downtrend, your 100 will be at this lower high, and the zero level of the Fibonacci, look at the zero level, will be at this lower low. So that is your range. Now, how do we determine that a pullback has commenced? Now, if you look at this Fibonacci tool carefully, you realize that we have a level of 23.6 here. Immediately price closes above 23.6. That is a confirmation that a retracement has just begun. So, but do we sell from 23? The answer is no. To sell, we need a discount zone. So our discount zone starts from this level that was highlighted yellow, 50 and above. So we only be looking for any point of interest. Number one is our order block. Look at, in this case, we have this order block up here. We have this order block up there. So this order block is number one. Then at this point again, we have a fair value gap. Look at this imbalance on this particular candle. So this imbalance falls in between the level of 50 and 61.8. So I will wait for my pullback to come into this level of 50 and 61.8 for me to look for a sell entry. If I choose to turn before reaching this level of 50, you are not going to sell. Even though you have a point of interest in that zone, it is not a valid one. I believe that is taken. Now, this is an uptrend scenario. In this uptrend, looking at this critically, price is giving us what? We are having a higher low and a higher high. So this is the first thing we have. So this becomes our range. Then all of this has not happened. This is the only movement that we have as far as price is concerned. So what is the next thing you want to see? You will now pick your Fibonacci level and mark this range. So in this uptrend, your 100 level of the Fibonacci will be at the higher low, and then your 0 level will be at the higher high. Then you now wait for price to pull back. You will only be looking for entry confirmation once price has pulled back to 50% downward. So from 50 downward is where you'll be looking for opportunity to buy. Okay, so now let's go to our main chart and see how exactly we can apply this. So back to our chart. So earlier on, we said what we have a break of structure at this zone. So here was our break of structure because we're having higher high, higher low, higher high, higher low, and a higher high. And the price came and break structure. So here becomes our break of structure. So now, what is our range? This movement from here to this downside is our range. So we'll now pick up our Fibonacci retracement tool to mark our range. So if you don't know how to do that, you will click on this. Just click on this. Click on this, and then once you click on that, I have my Fibonacci tool. So this is my Fibonacci tool. But if you open and yours is not visible, all you need to do is click on this plus sign. Okay, I'm going to click on it now. So you will now scroll up. You will see Fibonacci retracement tool. You see, right? This is it, Fibonacci retracement. So I'm going to click on it. Now, once you click on it, you have already picked the line by default. So anywhere you draw your hand, You can see that. So now this is our default Fibonacci tool. This is how the default Fibonacci tools look like. So you will see that it begins with the level of what? 23.6, 38.2, 50, 61. So we are going to edit this level. I'm going to press it down. When you press it down, you will realize that this icon will pop up, the edit icon, and I'm going to do that right away. So I'll click on the edit icon. You see now, I will move to the level. You see, I will click on level. I want to edit level. You can see we have 23.6. So I'm going to, you see this. So all these levels that are below 100, all of these ones, I'm going to delete it by clicking on this delete. So what do? We are going to delete those levels that are below 100. Delete. I've deleted. Now I want to add a new level. So I'm going to click on this plus sign to enable me add my new level. Now when you click on this plus sign, that is when this 00 will pop up. So I'm going to have 88.6, 88.6, and then 78.6, 78.6. So you see now I've added this level. Okay, this level is supposed to be 0.886. I'm sorry, 0.886. Yeah, 0.886. That is how it will appear. 0.886. And then this one is going to be 0.786. 0.786. So you now come to description. In your description, that's where you will now put 88.6, and then the next one is going to be 78.6. Then I'll click on done. You can see it now. So having done all of this, I've done this setup and I've clicked on done. So I will go back and then click on save. So can you see it? Can you see now that this line is reflecting? You can see that the figures has changed. Now I am having 100, 88.6, 78.6, 61.8, 50.2, 38, and then 23.6. So these levels are now visible. So I will want this line to be a bit bold. So I will go back there, click on this edit again, and I will still click on the level. Okay, now clicking on the level, I will increase the style because I want the level to be bold. So I will go back and then I will click on save. Beautifully well. So you can see now the line is very bold. So we are in a downtrend. We now have a break of structure in a downtrend. So we'll be connecting our Fibonacci in a downtrend. The 100 level of the Fibonacci is meant to be at the high. This 100 level of the Fibonacci is going to be at this high, while the 0 level is going to be at this low in a downtrend. So I'm going to apply my Fibonacci right away. So you can see now I've connected this to that point and then look at my low perfectly well. So you can see now how that has been done. So this is exactly how this works. So you can see this range that I have identified from here is what I connect my Fibonacci retracement to. So if you are connecting to wick, you connect it wick up, wick down. And if you want to use the body of the candle, it has to be the body to the body. Now that I've done this, I will now go further into marking my point of interest. Okay, so in this movement, Where is my point of interest? The first point of interest is my order block. So I'm going to mark my order block, which is that candle you are seeing right there beautifully well. That is my order block. Then another thing I saw here was, is there a fair value gap? No. Yeah, there is something tiny. There is a little imbalance in that zone. So I'm going to mark that imbalance, though it is very tiny. So yes, so that is the imbalance. And then there is also a breakers block here. Yeah, there is a breakers block. This breakers block coincides with the fair value gap. Then here now we have a smart money cube. Look at this. This is our smart money cube. Okay, so let me remove the Fibonacci first so that this can be clear for you to see. We have this smart money cube. You can see that. And then we have this little imbalance, which is our fair value gap there. Then we have this order block. So I'm going to mark my, let me go ahead now to mark the smart money cube. So all of these zones that I've marked now, we have three zones marked here. One, order block. Two, fair value gap. Three, smart money cube are zones of potential trade reversal within my range for me to sell. So I will now place, for me to determine which of these zones I'm actually going to sell, because I need to sell high at my premium zone. I will now put on my Fibonacci retracement tool. Look at this now. I've come up, you see, I've placed my Fibonacci retracement tool. So let's monitor the price pullback. Look at this. Price now pull back. Now, immediately we place our Fibonacci retracement tool, you realize that the smart money cube fall in between 38.2 of our Fibonacci tool. So automatically that becomes an invalid zone. We are not trading this smart money cube. This smart money cube fall into the wrong zone. So we are not trading the smart money cube. The smart money cube, any trade we want to take should be above the 50 level of the Fibonacci. Any point of interest that did not fall above the 50 level is invalid, either for a buy or for a sell. Okay, so now this particular smart money cube did not fall into that zone. So we are removing the smart money cube. The smart money cube is out of the way. So smart money cube is no longer valid. So we are only having two potentials now, this imbalance and this order block. So look at what happened. Price now move to the upside. You can see that price pulled back into 61.8 of our Fibonacci level and then gave us a bearish engulfing candle. Do you see that? Beautiful bearish engulfing candle, and then we have that sell entry, and then you see, so your stop loss. So obviously your stop loss is at this high, right? And then your take profit is somewhere here. So if you look at this, you realize that your stop loss is more, your take profit is obviously more than your stop loss. This is almost 1 to 2 or 1 to 3. So that is exactly the goal. Now let us proceed. This has placed out well, and then we are done with that. Then now that we had this, what is our new range? So you can see this now become a continuous process. This movement now, this impulsive move is our new range. So again, you will mark your point of interest in this range. So what is our point of interest here? We still have another block. So in this new movement, you realize that here now we have this other block. We have this other block. Now, I want you to pay attention to this, very much important. This first order block, price has not mitigated. Price only stop in this imbalance and reverse. So which means that this order block is still valid. There are still order of price that are in that zone. So I'm going to still mark this order block and extend it into the future because price has not mitigated that particular order block. The only thing that price has mitigated is our imbalance. So, and then I'll mark this new order block now for this new low. Now, that is exactly how to do it. And again, I'm coming to mark my, so I pick up my trend line, my Fibonacci level, and I mark this zone. Awesome. So now, I've marked my zone of Fibonacci retracement tool. So I've marked this zone. This is my lower high, and then this is my lower low. So I mark week to week. So that is perfect. And since I have done that, I am now looking forward potential trade entry. I'm looking forward potential trade entry. So what happened? Price pulled back all the way to this zone. Look at what was happening. I don't have any candlestick for a sell signal. Everything is pushing up. Even here is not an engulfing candle. Then until we get to this zone, you see that price push above the 100 level. Price went out of it, right? Price went out of it. Now, you must know why the price went out of this zone. Because this order block here has not been mitigated previously. This order block has not been mitigated previously. And this zone now, and this particular zone, now serve as a liquidity sitting here. So price push, take this liquidity in order to mitigate this order block. So because of that, that is why price closed above the 100 level. And this becomes a much more high probability trade for us. So just imagine your entry is here, your stop loss is here. That is stop loss. This is entry. Just imagine where your take profit is. Your take profit is here. Can you see? This is almost 1 to 6. Almost 1:6 in profit. And then you can see how that price plays out beautifully well. So immediately this has been done, automatically that order block has been mitigated. So what is the next thing? This becomes your new range. So what do? You now mark your point of interest on that range. And how do you do that? You quickly mark your order block. Now this is the new order block. Now, in this movement, we have order block. The next question is, do we have a fair value gap? We don't have a fair value gap here. Do we have a smart money cube? We don't have a smart money cube here. The only thing we have in this movement is a fair value gap. Okay? And then we have a breakers block. We have a breakers block. So this is our breakers block that take away this low. So now what do? We pick our Fibonacci retracement tool to mark this zone. So you see now we have marked this zone beautifully well. So while we have marked this zone, look at what happened. Price begins to pull back and pull back and pull back. So anything above 50 will begin to look for our entry. And at when we get to 78.6 zone, we now have this candlestick pattern. We have that evening star formation and then the bearish engulfing candle. So we sell. You sell from that zone. Imagine your take profit. Imagine your stop loss. So you can see how this works out perfectly well. So you can go on and on. This is the best way to trade. Now this is your new range, right? and then we will now mark our new order block. So here is our new order block, right? Now we have a fair value gap. So let's mark our fair value gap. You can see this. This is our fair value gap all the way to this point. So this is our fair value gap. So what is the next thing we want to do? You connect your Fibonacci tool to your range. So beautifully well. So you can see now we have connected our Fibonacci to our range. Now look at what happened. Price fill into this fair value gap completely all the way to 78.6 and tap into 88.6, then gave us a bearish engulfing candle. So you will sell here. Your stop loss is here. Look at your take profit is meant to be here. And then this is current price scenario. So this is exactly how you can sell from a discount zone. Now this video has been so long and I don't want it to be more than this. If you do the opposite of this in an uptrend, it will be for a buy trade. But for purpose of clarity, in the subsequent video, I'll be illustrating how we can buy from a discount zone. What we have succeeded in doing now is how we can sell from a discount, from a premium zone. Yes, in a downtrend. So subsequently, we'll be considering an uptrend. So there will be a part 2 of this video, and thank you for your support. Thank you for watching to this time. If you are yet to subscribe, please do well to subscribe. Turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you and see you in the subsequent video.